this is a very good trade I took on oil. I have a pattern, and this pattern is not just happening anywhere, it's happening on the low of the previous day, and then it breaks out. This is the first thing which is important. You wait for a pattern where at the closing price or at the low or at the high. Once you do that, you find a pattern, you have to wait patiently for it to break out. You don't jump in when it breaks out, you remain patient. So here it breaks out, it pulls all the way back, and then it comes up with a big candle. So this candle over here is the one that I bought on. Unfortunately, some days candles are super fast, so by the time I executed, it was executed on this next one, but I executed on this one when there was only 1 second left, and here I took 200 and something points. This is another one I took. This is gold. It gave this multi-top, which again I can say it's a rectangle. It broke down to the downside, I waited, I did nothing, it retested, and then it collapsed with this big candle. That's when I entered all the way to the closing price. So this one I took 170 something points. This is Nasdaq. As you can see, they gave me a pattern. This was at the high of the previous day. They gave me a rectangle, they broke to the downside, I did nothing. Be patient. That's when they retested and they collapsed. When they collapsed with a big candle in a 5-minute time frame, that's why I took it all the way down to the closing price. Unfortunately, they ended up going 1,000 bit, but it's not about the size of the move, it's about the quality. Here I took 170 something points. Well, let me explain this strategy. Doesn't matter. Let's say they did something like this and they eventually closed here. So when they close here, you're gonna realize there are two things here. We have the high of the previous day, which is here, and we have the low of the previous day, as well as the closing price of the previous day. Let's say on this day they decide to do something like this, then they play, they can break it, doesn't matter, then they come, they do something like this, they come all the way down, they go all the way up, and they do this right before the New York opens. Let's say now the New York is about to open. You'll realize two things when you come to your screen. You'll realize that we have a box over here. This is just a rectangle which actually covers this high and this low and everything that happens inside. They kept bouncing in between yesterday's closing price, which is denoted by this line, and yesterday's high, which is denoted by this line. So in a nutshell, we can say they are holding a level. They are neither going down nor going up. They are just holding this level. They are holding the closing price and they are holding the high of the previous day. Our job here is just to wait. When we come during the New York session, if we see something like this, we wait. What are we waiting for? We are waiting for them to break out into one side. What do we do when they break out? Nothing. We wait for them to retest. Some days they will go all the way and retest their closing price. Some days they won't come back to this box here. But what we are actually waiting for is for them to retest and then give us this super big candle over here, which is collapsing to the downside. When they retest and give us an engulfing candle here, they confirm the move. We are taking it all the way down. And for our target, we take this distance and this distance and we multiply them by 2. That's when we get the target, because that's where they're gonna go most of the days. Can you wait for this? That's the $1 million question. Pattern where? Pattern where? If it's a pattern on the closing price, just wait for it. This is not gonna happen every day, but when it does, it's actually gonna be the easiest execution you will ever have. So you can just simply wait for this each and every day. Whenever you find it, you execute. Somebody might ask, why do we have to wait for them to break out and then wait for a retest? Well, that is simple, because some days they're gonna give you something like a half Batman. Some days they're gonna come here and break out and then eventually go all the way to the top, come and retest this one, and then go all the way up. So in this case, if you were waiting for a retest, you can clearly see that on this day you are safe. Let's look at Bitcoin on the 9th of April. Look at what they did. They were actually giving a rectangle where at the low of the yesterday and at the closing price of yesterday. So yes, of course, some days it closes near the low or near the high. But when you look at this one, you can clearly see this is a rectangle. If we include this part down here, this is a half Batman. Somebody might ask, what if I entered here? But you know, Bitcoin moves well during the US session. It means if you entered here, this was before the US session. If you waited for the New York session and you were patient, you could have seen that what did they do? They actually broke out here. What did we say about the first breakout? We wait to see. Then they came and retested. They never broke out again up until this point over here. This one gave a beautiful execution. Yes, of course, it was yesterday late during forming, but it was a beautiful one. You can see they went down and they came back. But even for somebody who entered here and put stops below the swing low, still it was a good one. If you look at these days, markets are too volatile, and we spoke about not exceeding 25 points or pips, but look at the market's condition right now. now they are giving beautiful executions, however the candles are big. How do you deal with this? You reduce your size. When you reduce your size, you can have bigger stops, then you can actually take advantage of this. They broke out, then they retested. This is a retest. Some retest will come back inside the rectangle, some won't. Here's the next one. As you can see here, this is the one I took. They bounced here, they bounced here, they bounced here. In other words, they gave a rectangle where above the closing price of yesterday, above the closing price of yesterday. Then what did they do? They broke to the downside, as you can see here. Then they retested. Then they fell with a super big candle. That's when they collapsed all the way down. Same thing. Draw your box during the New York session. Wait for the breakout. They broke out. Wait now for the retest to avoid jumping into fake breakouts. They did that and then they collapsed. This is the big candle you enter on. Let's go to the next one. This is Ethereum. Yesterday, they gave a box where yesterday's low and yesterday's closing price. The $1 million question again is what? Pattern where? They're giving you a bigger pattern on the closing price and the low of the previous day. Yes, they break to the downside, but at this point this means nothing because these ones moved during the New York session, right? And then they came, they broke out here, they retested big candle, and that's when they came again with a pin. Yes, of course, some days they will close you, but one thing I take advantage of is some days when they close me, I still know when a move is valid, because when this pin engulfing candle closed, obviously the job was down. Some days you clearly know that the job is done. Let's go to the next one. This was gold. When you look at what gold did, what did they do? They gave a box. This was very early in the morning. We spoke about gold moving during the Asian session, again moving during the London and moving during the New York session. So what did they do? This is the closing price. This is New York session yesterday. So during New York session, they held prices stagnant. Then they built a very big box. Yes, of course, they broke to the downside. But what did we say about the first breakout? We wait for a breakout, then a retest. However, here they never broke out down again. They came and bounced on what? On the low. Then they went all the way up and broke to the upside. Here again, what did we say? We wait for a retest. So this one, as we were waiting for a retest, they just went up. And as we are waiting for a retest, we then realized that, oh, they are building another pattern. This time around, it's a triangle. What do? They break out of the triangle. That's when they retest what? The triangle, and they give a super big candle which breaks the high of the previous day. This is a very beautiful execution. They have pieced through the high, and you can see they gave the first pattern, second pattern, broke out of this one, retested this one, and then gave the engulfing candle starting from here. This move was a super beautiful one. Same thing every day. Let's go to the next one. The next one here is gold again. If you look at gold, what are they doing? The $1 million question again is pattern where? This box just tells it's a rectangle. Some days it's gonna be a half Batman if they piece through one side. What did they do at this point here? Obviously this is not happening in a closing price or anywhere, so we can't take this one. What do? They go and do? They go and piece up, and you can see there's no pattern at this point. Then they start building a rectangle. They break to the downside during the right time. Then they do what? They pull all the way back to where? To yesterday's closing price. Then that's when they collapse. And here's another candle which again has broken out of yesterday's level. As you can see, yesterday's low is broken. This one is actually going down. Even if you take it to this low here, or you take this distance times 2, it's super good. Same thing every day. Let's come to this one again. This one again is gold. You can see this is a huge rectangle. Having a rectangle like this helps avoid fake breakouts. They give a rectangle, we have this closing price here. So this rectangle is happening at the closing price of yesterday. Then they break to the downside. What do? They retest, and here they collapse with a super big engulfing candle inside the EMA. This move is going. Same things every day. Pattern where? Then they break out. We want to see a retest. Let's go to another one. This one again is gold. They give you a beautiful triangle where? Pattern where? You can see this triangle is actually happening at yesterday's high. So they give it, they break to the downside. They did not retest here. So what do we have? We now have another triangle which they break out, and then then they retest with this green candle and give a super big candle to the downside. This move is collapsing. You see, they break out, they retest. If you go to a 1 minute time frame, you'll see they retested very perfectly. That's when they collapsed with this big one, and obviously this move was going all the way down. So you can see pattern where if you wait for this kind of patterns, you will hardly lose a trade. Here's another one here. This is gold again. You can see this is a triangle. If they piece through one side, this becomes a half Batman. So this is a half Batman. Where is it happening? It's happening at yesterday's high and yesterday's closing price. Then what do? They come, you see, they come all the way here. They piece with this pins and then they retest. They go to yesterday's high, then they collapse. So obviously when they come and bounce on this one here and collapse, this is important information. This is important information. This here is something like we are not going any higher. We don't want to go high. You can simply read the message they are actually telling. They are sending people up, go up, go up, go up, and then at some point they say we are not going any way higher. What are we doing? We are going down. Hence why they come and bounce on this one here and then they piece through the close and this one is gone. So these are the most easiest one. Now let's go to another one. As you can see, this one is gold again. It started from the previous day. They gave a beautiful rectangle where if you look here, it's still at a level. You can see it's at yesterday's high. What do? They play. Yes, they piece through. If you were waiting, obviously here they did not give a follow through. That's when they break all the way to the upside. Actually, this one happened today. Yes, this happened today. I bought this one here. They came and bounced on yesterday's high. What did they do? They then gave this beautiful engulfing candle and this move went up. Today I think it went 600. By now it's actually at 600, and that was obvious because they were actually heading to the all-time high and they reached it today. So this one you can see a beautiful triangle. Then they come and piece through with a super big one. What do? Nothing. It could be a fake breakout. When they retest and give a big one, you enter. So this one I took it and it actually went over 500 now. This one here is Dow. If you look at Dow, what did they do? They gave a super beautiful rectangle where yesterday's closing and yesterday's low, you can see. Then they broke to the downside. They came and retested and fell with this super big one. If you put your stop above the swing high, obviously this move was in your favor. Again, if you're still on the screen, you can see now they collapse with a super big one. However, as I said, if you look at this past weeks, they are so volatile because of the tariffs. You just have to reduce your size and that's when you can actually capitalize on the biggest move. You see, same thing every day. Pattern where then breakout, retest, collapse. Let's go to the next one. This one is the Dow again. If you look at it, same thing. This is yesterday's low, this is yesterday's closing price. They give a rectangle here. When the New York session opens, they break to the upside, then they come and retest, they come back with a super big candle. That's when they go all the way up. So for stops below the swing low, this move was all yours. Let's come to another one. This is the NAS. Same thing, rectangle where on the low of yesterday and the closing price of yesterday, they play. You just wait. They break out, you remain patient. They come, they bounce, and that's when they come and break to the upside. If you are gonna be losing an execution, it's better to lose after they've broken out and retested. It makes sense because you know you waited and you were patient, and sometimes those things can happen. And you still know if you want to take another one, you can still take it later if that move is still valid. That's why you start with a smaller size and you add in. But if you are losing, the only acceptable place to lose is here after they have broken out, pulled back, and actually retested with a super big candle. That's the only place that is acceptable to lose at. If we go to this one, I took this one. This one I took it based on the explosive trading strategy for indices. The explosive one for indices is actually outlined on this middle part here. This is on the playbook. This is the playbook I use for all my executions. We have strategies for currencies here. We have the continuation strategy here. I'm working on adding another one here, but I'll add it. So here we have the most explosive one for indices. All the steps are outlined there and all the patterns you'll ever need are outlined there. And this book is actually in the description. So the one that I'm talking about now, when I say the most explosive one for indices, it's actually outlined here. And that's the one I took right now. On this one, as you can see, what did they do? They went all the way up. I was observing them. I was watching them, because even on the most explosive trading strategy for indices, we outlined that we have to observe, we have to be patient, we are not going to chase moves. What did these guys do? They came to the high. What did they do the moment they reached the high? They failed to break through. However, the most important thing is they started giving us a rectangle. As you can see, it's just a rectangle. Then they broke to the downside. This was before the right time. When you look at that playbook, it outlines the times we are actually supposed to execute on. This was few minutes before. However, when they broke out and pulled back, the moment they pulled back here, the time was correct. I executed it here. I showed you, and I took 200 here. Although it ended up going 1,000 down, but it was okay and it was good for me. So this one is the one I just showed you in the middle book. It's the most explosive one for indices. I've outlined everything step by step. So now we go to the next one. As you can see, this one here. Again, what did they do? We have the closing price here. This is oil. We have the closing price here. And then we have a beautiful rectangle. As you can see, this is just a beautiful box. You put this box here so that it keeps you patient. You don't care about what's happening inside here. Then the moment they break down, that's when you start looking, because you'll have your alerts down and you have your alerts up. So the moment they break down, that's when you start observing. Then what did they do? They pull back and collapse with this super big one. That's the execution. They always collapse with a big one. And look at the 21st EMA. Everything has just bounced here and it's inside the 21st EMA, and then they are going all the way to the downside. So this is just one thing each and every day if you only wait for this. However, the challenge with this is maybe in a week it might happen 2 times, 1 time or 3 times, but I assure you, if you wait for this, you never ever gonna have multiple losses. Only if you wait. This is not hard because you just observe. $1 million question is pattern where this pattern was happening where on the closing price of the previous day. So they are holding the closing price. This is not a continuation where they give you an opportunity to continue. No, this is not that. This is where they hold the closing price. They hold the closing price. Then you just wait for them to break down, pull back and break down again, because some days they will give you a fake breakdown and end up breaking to the upside. So it doesn't matter whether there's tariffs, it doesn't matter whether the market is sour, whether what's happening, who is being panic and who is not in panic. That is irrelevant. The only relevant thing is wait for this to actually happen. Here's another one on Ethereum. If you look, we have this green beautiful rectangle over here. Where is it? $1 million question. Pattern where? It's at the closing price of the previous day and the low of the previous day. Then you can see there's this point here and obviously there's this point here. So this is just a rectangle. Some days the rectangles won't be as you want them. That's why it's important to train your eyes on seeing the rectangles. Then they break down. What do? They are here on yesterday's low. They come back inside and that's when they start collapsing. You see, and eventually they give the beautiful candle here and it goes all the way down. So it's the same thing. Pattern where? That is if or when they hold the closing price, because some days they are going to give a continuation pattern which is so good, but some days they are just going to hold the closing price. So you are covered in all instances. If they hold the closing price, you know what to anticipate. You need a rectangle, you need them to break into a direction, then you need them to go back, retest. If they just collapse, it's fine. There are a lot of days in a year, so there's always going to be a next one tomorrow, right? So in a nutshell, this is the simplicity and this actually covers this entire thing.